In terms of doing a deal, I say leverage is queen. So I'll run you through two ways this has I guess happened in my life so far. And the first time with Rod, I can't outline everything, but what we ended up doing is when we engaged initially, I was moving into a space in the market where he was already doing something, and it was somewhat coincidental, really, because we both had the same sort of direction. But the important thing is that when you go through a deal, you might be talking to 3 or 4 people, and you're running your business, of course. So while it might be a great, fantastic idea to have 10 or 20 investors on the go in the end, you're going to narrow down quite quickly to a few. And after you start making a bit more progress, you'll be down to 2, and then maybe down to 1. Now the problem is, and I'll outline the 11th hour in a second, when you get down to the end, it's full transparency, right? So they know everything about your business, they know your financials, know your cash position, know your cash flow. So at that point in time, you better have something else on the table, otherwise they're gonna do a deal at the last minute, and you're gonna take that deal. And this is not them screwing you down. This is a really important point I want to make, because that's what you want an investor to be doing. They're going to be on your board soon. They're going to be helping you negotiate big deals. You want someone who's a really, really good negotiator. So use that as a test, right? Right up until the end, they're going to be putting the screw, not to screw you down, because if you can't push back up the other way, you're not a good negotiator. And in the end, it should be a lower value business. A high value business is backed up by people who can execute and who can negotiate. You've given away a percentage of the company, right? So beyond that point in time, there's no going back. So you've got to make sure you negotiate at this period. And again, I'll go back to the 11th hour very soon, but this happens every time in a deal, where I guess right up until the last minute, you're trying to come up with deal points. They're trying to pick holes in the business case, which is good, by the way. You're getting someone testing your business model. They ask all the hard questions. You've got an opportunity to go away, see if you have actually got really good answers, come up with the answers, and then present them back out. So what it ends up doing is treat this negotiation process. And I don't think many people see it this way. People say, I'm not a good negotiator. I personally didn't used to like negotiating quite a few years ago, but after having no money, you realise I've got to negotiate to get my sales. Then after a while, you think, well, that's actually not so bad. I can actually learn something from negotiating. And then now I get to the point with investments, but it's just fun. It's a really good time, because it's an opportunity just to stand up and be your best. People are knocking you down, but it's not personal, right? They're trying to pick your business proposition apart so you can make it stronger. So do that negotiation, and don't be afraid of I guess, personal feelings, because these guys are negotiators as well, and there's nothing personal. When the money hits the bank, okay, you're friends now, and you're working together. So this is the only time you've got to maybe agitate each other a little bit. Eliminate the lights out risk, and this is probably a big reason why we've built Planhq again, is we haven't built it just to help you secure investment and manage an investment relationship, but I am very much focused on building global businesses, and global businesses require capital, so you're going to have investors. So Planhq is available to any type of customer trying to grow their company in the world, but without a doubt, if you're trying to raise money or build a global company, that's targeted at you, because the requirements are far higher. And I guess the lights out risk, an investor is looking beyond the money, right? Going, once I put the money in, how am I going to know how it's being spent and where it's going? So let's have a quick example right now. Average company sitting there on maybe a piece of MYB software, packaged software in-house. So either you're going to be going up and setting up a VPN and letting your investor in every now and then, not going to happen, not interested in doing it. So you're going to be ripping out reports, emailing them every month, and that's the best case scenario for an investor. And they know you've got really limited management time. So if it comes to the end of that month and you're saying, look, if we don't work on the deals today and close them, then we're not going to be in a good cash position, they'll go, cool, don't worry about the reporting this month, that's okay. Let it pass a couple of times maybe, but after a while, there's a lights out risk, and they're not happy about that. So they're thinking about this ahead of time now. Seasoned investors know full well, how the hell am I going to track this investment ongoing? It's really, really important. And if you want to get a good valuation, show them that they can track it the entire time, and you can pump up a bit. It's a value point, it's a negotiating point. Sitting at the table, if you say, here's our forecast, and you're going to be able to track it whenever you like. This was Planhq, your investor can just log in anytime they like, track it, it'll email them a report every month or week, or whatever they want, at whatever level, and give them the information they need. So now they're connected to your company the entire time. And Xero obviously is on the exact same path here. You've got real-time financial information showing investors that this is a financial asset that you are managing. You're focused on the numbers, your team business, it's your competition and your market strategy driving your business, and it's right in front of everybody the whole time. So try and get on visibility products. Don't go around with a Word document and a spreadsheet, emailing them to everybody back and forth. Try and take that next step ahead and just be really proactive. If you're out there right now, in my opinion, in the marketplace, obviously it's my product, but looking to raise money from investors, if you're sitting on Planhq, your plan is more transparent than anyone else in the market. And I guess just to back this up a little bit, so 2 weeks ago I got approached by a US venture capital company called First Round. They've got about a $200 million fund. He quickly tried the product, half an hour later said, look, really like this in my portfolio companies, can I rebrand the product? Looked great. 20 minutes later, had the phone call. 2 hours later, he deposited half the money and he's on board. Now, from his perspective, from my perspective it's great, by the way, that's half my cash per month. But from his perspective, right, this is a big validation for me in Planhq, because I'm trying to get in that relationship between a team, a management team and an investor, because that's where it's falling down at the moment, Investors are being left in the dark. and investments aren't being managed very well, and management teams aren't focused on the same goals that investors are focused on, and you get to a board meeting at the end of the month, and people are annoyed, and you spend the first 2 hours, wondering why things have happened, and then finally maybe the last hour forward looking. That is not a way to run a business and grow a business, right? You want really, really strategic time from all these board guys. Once you get to a board meeting, they're up to date with all the stuff, all the historical stuff, well up to date. They've seen your latest forecast, no problem at all. It's all about how can we just really, really push it now. So I guess with Planhq, sorry, excuse me, with Planhq, working with First Round Capital as our first VC on board, I guess it's really, really good validation that this does help investor-backed companies. He's got over $200 million invested between 40 companies, and they're all on Planhq in 3 weeks once we finish the deal. So I guess I'm trying to come back into the New Zealand market and say it's a pretty clear signal from people who know how to make money off businesses. They're looking for transparency and they value it a great deal. Sorry, jump ahead. The 11th hour, and I'll just outline one quick scenario where this has happened. And I've raised money a few times, by the way. The first time I did it was not for my own company. I had a very small stake in a company called Energy Intellect here. We raised some money from a publicly listed company in New Zealand after touring the US for about 12 months. Spent about 3 of that just moving around the country, doing road trips, talking to VCs, talking to private equity firms, and talking to some of the bigger banks. At that time, it was 2002. We needed money, but the market did not need to give money to tech companies. So it's not a really good time. So what happened in this case though, we came back to the market, had an investor lined up, and 4 days before the deal was ready to be signed at $12.2 million, things changed. The 11th hour was there, of course. All our financial information is on the table, quite an exposed position by this point in time. They know exactly when you're going to run out of money. So when they slow things down for 2 weeks, they know what's happening. Everyone's freaking out, and suddenly you're willing to take a lower deal, right? It's as simple as that. $1 million got knocked off, 2 weeks later, deal signed. Good deal, but 11th hour, right? And if we had we did our best to line up options, but I guess, if you're pre-investment now, really think about that 11th hour, because by that stage you're probably quite friendly, it's all good, everything's looking great. Just think, hang on, until we've signed this, I better just make sure I can hold the value that we've discussed as it is, because it'll move in the last minute. I'm just going to move on now to what to avoid. Whenever I've got up at the moment and talked about raising capital, I've done it a few times in the last couple of months. People want to hear the story, and it's a really exciting story, and I'm a very positive person about the local business community, about our technology community, very passionate about it, and it's really important. But I guess, I'm making mistakes, and a lot of other people are making mistakes, and I think it's really important that we're quite honest with each other about them, so we don't keep making these. I'm going to run through them in a bit more detail, but quickly is talking in ideas instead of a business, illusions and talking yourself up, saying you're undercapitalised, convincing yourself you'll succeed because of what's happening around you, saying your business plan is done when it isn't in action right now, and thinking that because you've filled everything out that you've got a successful business strategy. And I appreciate what you're saying before, obviously, about you need to fill these forms out to get the government money, without a doubt. But don't let that delude you to thinking you have got a strategy for your company, because you've still got to sort that out. So I'll just jump through again to the next one.